Hi everyone, this is Chike Chow here at CKC Lending. If you're looking to buy your first home, the first home guarantee can make your journey a lot easier. In this video, I'm going to explain how the scheme works right now, the major changes that are going to come into effect on the 1st of October 2025, and most importantly, what this means for you as a first home buyer. We will also go through how much deposit you will need, the stamp duty cost across different states and territories, as well as the total savings required, the loan amount you'll be borrowing, and even the estimated monthly repayments, all broken down step by step for you. So let's first look at how the first home guarantee works today. The scheme helps first home buyers purchase a property with just a 5% deposit while avoiding the cost of lender's mortgage insurance, also known as LMI. So normally, without a 20% deposit, lenders would have to charge you the LMI on top of the loan amount that you're borrowing. Now that can add thousands to your overall loan. But under the scheme, because the government steps in as a guarantor for up to the remaining 15%, you won't need to pay LMI, which is effectively the benefit of the scheme. Right now, there are 35,000 spots available each financial year, and to qualify, you will need to meet the following criteria. You will need to be either an Australian citizen or a permanent resident. There's an income test where the taxable income must be at or below $125,000 for individuals or a combined $200,000 for joint applicants from the previous financial year as per the notice of assessment. Now, also note that for you to get the notice of assessment, you will actually have to lodge your individual tax return. You will also need to have a minimum deposit of at least 5% of the property value. You must be a first home buyer or have not owned a property in Australia within the last 10 years. Now, if there are two applicants, this applies to both people, effective as of the home loan date. You must also buy or build a home to live in. So in other words, it can't be an investment property. The applicants need to be at least 18 years of age. They also have an eligibility tool that will allow you to quickly find out whether you qualify for the scheme. Using the scheme, you can buy either a new or an existing residential property, as long as it is below the property price cap for the location that you're buying. Now, again, this could be an existing house, townhouse, or an apartment, or you can even buy a house and land package or an off-the-plan purchase. There is also a postcode search tool that you can use to check the price cap for the location that you're looking to buy in. Now, keep in mind, this is only a guide, and you will also need to check with the participating lender whether the property meets the price cap threshold. Alright, now that you're familiar with the first home guarantee, let's talk about the changes that are coming into effect on the 1st of October 2025. Essentially, these updates are designed to make the scheme more accessible for first home buyers across Australia. Now, the four biggest changes are the unlimited places, because currently, as you may know, the scheme is capped at 35,000 spots each year. But as of October, there'll be basically no limits as to how many first home buyers can apply. Secondly, there is no income cap. The previous taxable income limits of $125,000 for singles and $200,000 for couples are now being removed, meaning that buyers with even greater taxable income will also qualify. Thirdly, higher property price caps. You'll now be able to purchase more expensive homes under the scheme with new limits varying by state and region. Lastly, the simpler access in regional areas. They previously had the regional first home buyer guarantee, which is now being replaced by the first home guarantee. To summarize these changes, this means more flexibility, more choice, and less red tape. Whether you're in Sydney, Melbourne, or a regional town, the first home guarantee is about to become much more easier for you to access as a first home buyer. Now, let's talk about one of the biggest upfront costs when buying a first home: stamp duty, along with the registration and transfer fees. The amount you pay depends on two main things. Number one is the purchase price of the property. Number two, the state or territory that you're buying in. Looking at this table, you'll see that for a property at $600,000 in New South Wales, the stamp duty is currently zero. That's because of the First Home Buyers Assistance Scheme, which is a New South Wales initiative. Whereas in Victoria, the same purchase price comes with over $1,600 in fees, whereas in South Australia, it's more than $32,000. So as the purchase price goes up, so do the fees. So for example, at $1 million in New South Wales, stamp duty and fees come to just under $40,000. In Victoria, at $950,000, you're looking at over $54,000. The key takeaway here is that your property price directly determines how much stamp duty you'll need to budget for, and these amounts vary significantly between states. To get an exact figure for your own situation, I've included links below to each state and territory's official stamp duty calculator. Now, what does this mean for you as a first home buyer? It means your upfront savings need to cover two things: your 5% deposit, plus the stamp duty and fees we just went through. So this table shows you exactly how much you will need to save up front, which is the deposit plus the stamp duty. So for example, in New South Wales, if you're buying an $800,000 property, your deposit is going to be $40,000, and because stamp duty is waived, your total upfront savings requirement is still $40,000. But let's say in Victoria, on the same $800,000 purchase, you'll actually need $85,000 in total, $40,000 for the deposit plus $45,000 in stamp duty. These combined savings requirements can jump significantly. That is why understanding both the deposit and stamp duty is critical when planning your first home purchase. Once you have saved your 5% deposit and stamp duty fees, when applicable, the remaining 95% is the loan that you'll need from the bank. Now, this table shows you the loan size for each purchase price. For example, on an $800,000 property, your loan amount will be $760,000. Whereas at $1 million, your loan is $950,000. This helps you to see the scale of borrowing required under the first home guarantee, since you're funding almost the entire property price through the loan. Finally, let's look at the monthly repayments. These are based on a 95% loan, principal and interest over 30 years at an interest rate of 5.49 per annum. On a $600,000 property, repayments are around $3,232 per month. At $800,000, that rises to about $4,310. And if you're purchasing a $1 million property, repayments are just under $5,400 per month. This makes it clear as the property price increases, not only do your savings requirements go up, but also your monthly repayments. That's why working with a broker is so important, to help you balance your budget, savings, and borrowing capacity to find the right property price point for your situation. So that's the full breakdown of the first home guarantee, both how it works today and the changes that are coming on the 1st of October 2025. If you'd like to know how this applies to your situation, including your deposit requirement, stamp duty, as well as the repayments, don't hesitate to reach out. Thanks for watching, and please click the subscribe button, and I will see you in the next video.